Welcome to Wage Zero, where I share my journey about building wealth and making work optional. Today we are going to take a look at IBM. Since yesterday it crashed 25% in a single day, as a historical day for IBM, not a good one. And here you can see how it crashed from almost 300 to 220s. The volatility is going wild recently. Okay, so first we see some indicators in this tool to invest, and I see the red ones, so not a good sign to begin with, particularly in growth and value. But let's start with quality, which is the thing that I like the most. Okay, so net margins 12%. That's pretty decent. If we look at if they are stable or not, we see that this company had an operating margin of around 20%. It was going well, but now it started to decrease and went to 10%. Well, 2020 was a tough year, but still. And now they are recovering again, almost close to 20. So they are recovering, but not a very stable net margin. That also gives us some hints about this overall stability of the company. Return of equity 32%, quite good. Return of invested capital 16%, that's also decent. But this is what I don't like. Net debt divided by EBITDA 3.5 times. Everything beyond 3 times starts to worry me a bit. This is not good. Yeah, not good at all. If we go to value or no, first dividend. So the dividend is 2.3%. It's not too high. Yeah, it's a bit towards the lower end. Payout ratio, free cash flow, 50%. That's fine. Growth, that's not good. 0.6% is a very low growth. If we look at the growth here, so it's been 0.6 for the last 5 years. So the dividend has been basically frozen. This is not good at all. If I look at companies to invest that they pay dividends and I see this kind of behavior, I worry a lot. Also, if here we see the payout ratio, free cash flow ratio, the beginning of we were at almost 26 years ago. It was 21% and has been increasing in a fast pace. I don't like that because now we are paying almost. We need half of the free cash flow to pay the dividend, and the dividend is frozen. So I don't see the ability of this company to grow the dividend. This is not great. I'm not sure if they can even afford to pay this dividend if this trend continue. If you couple this together with a high debt, it's going to be a pass for me in this one. If we look at the value, forward P 17.5. Okay, a bit high, I would say, for this company, given the fact that what we have seen, right? Dividend is almost frozen, payout ratio is increasing, they have debt. Let's see. So 17.5, this is 20, right? So we are about here. And for the previous 2021, so 5 years, usually this stock bottom around PE ratio 19. Yeah, 19. However, I don't know what is this. This doesn't make any sense. Paying P ratio almost 100. and also 50 for this company. I think this has to do because this company shifted his businesses several times to adapt to the new trends. He did it with Watson supercomputer, um, and also they are doing it with quantum computing, blockchain, and mainframes, also cloud and AI. Um, yeah, they are evolving, but they are also not doing very well. And people get very hyped sometimes, and they pay things that they shouldn't have paid. And if we look to previous years, this company has been around 12, 15 P. That's more normal for this company, I would say. So the current valuation is not cheap. I think is close to fair value. Uh, no, not cheap. Okay, so let's go to the meat and potatoes, financial data. First, let's hide everything, just revenue and operating cash flow. And let's take these last year's 2027. Yeah. So, so they were earning more money before, and now they are kind of recovering, right, and going back on track. Maybe makes sense to view the previous years as well. Oh wow! So they were making a lot of money, and then it was decreasing for several years, almost like 6 years, 7 years. 2019. So here I think they acquired Red Hat, the Linux-based operating system. And since then they shifted more to cloud and AI, and they have been performing better, but they are still nowhere close to previous years. Okay. And also the operating cash flow is not very stable. It's even going down. Oh, okay. So you are telling me that revenues are going up, operating cash flow is going down. Now it's just frozen last 3 years, but you expect this to be bumped for the next year. And what about the future? So revenues up, okay, and operating cash flow just still stagnated, even lower in 2029. I'm not happy with these growth expectations either. I'm not seeing anything that I like from this company. Okay, let's see all the rest. Let's hide total revenue. Let's see how they behave, how they spend their money. Okay, so let's see. 2022, 10 billion in operating cash flow. They have 1.3 billion and capex. Yeah, okay, capex. So 9 billions of free cash flow. They lose some money in investments, so those be 2 billions. 2 billions in acquisitions. This is a company that make acquisitions. And so 4 billions, and then 6 billions in dividends, 10 billion. So we basically need to take some debt, right? 1 billion, exactly, yeah. So they took 1 billion into debt, and they had a huge debt. Okay, so basically the free cash flow is spent in dividends and then acquisitions, and they don't have anything else left. 2023, more or less same. Free cash flow. They acquire more. They spend 3 billions more. Same for the dividends. So if everything is the same, you have to take 3 billions plus into debt, right? Yeah, 4 billions in debt. This is not going good, right? They are just using debt to fund acquisitions, and they need acquisitions in order to grow. So it's not organic growth. And 2024, yeah, more of the same. But here they make 12, 6 left, 3 left. Yeah, so here they didn't take debt. They paid a little bit, but this is peanuts. They need to pay much more debt. This is not going to make it. And the last year is almost 12. So the free cash flow has been 12 for the last 4 years. It's completely flat. Well, 3 years. Okay, completely flat. Oh, okay. 8 billions in acquisitions. Dividends. There is no much margin to increase the dividends if you are going to make these acquisitions, and there you are going to rely on debt always to make these acquisitions. There is no buffer. I'm not liking what I see. And then the expectations for 2026 is they are going to make more money, not too much. And then next one is almost similar. I'm not liking this. If we see in the future, so the plan is basically staying flat in operating cash flow, and then reducing the debt while increasing revenues. I don't trust this plan. They are very constrained in the money they have. They are always taking debt, and I have to trust that they're going to increase sales and they're going to behave very well, not making difficult or hard big acquisitions, and they're going to use that money to reduce the debt. I'm not buying this narrative, to be honest. So, in summary, should I own this company? Well, is it a quality company? I would say it's a good one. I'm not sure if it's a quality company, looking at these metrics. Net margin could be a bit higher, also for the industry is good. And they have noticeable debt. Could be, but yeah. But if we look at dividend, it's going to pay me a good dividend? No. Will it pay me a good dividend? No. So yeah, here is a big no. If the dividend is not going to be good, then will I get some growth maybe? Well, no, because he's been growing at a 5%. We have seen in the expectation that it's going to remain at that pace. So yeah, dividend is quite okayish. Growth is not going very well. I don't want to own this company. Maybe you know something that I don't know. Maybe you have studied IBM more. Maybe you know their pipeline of products and a turnaround is coming. But seeing these numbers, I'm not comfortable holding this company. And if we ask me, not even trading, because if we look at the value at the forward P 17.5, it's not cheap, but I could say it's close to fair value. So if it's close to fair value, if I buy, how I'm going to make money if it's already fairly valued? So I don't see a reason to own it, neither to trade it. Yeah, if you see the chart, usually these big dumps they should bounce, right? But I don't know if they will bounce or not. If tomorrow goes 50% plus, I don't know, and I don't care, because to be honest, this company, I was expecting more about it. I'm not sure why people was paying these prices around here, and I don't see an attractive price now. So maybe around 200 will be okay price. I think right now is a little bit above 30 price. So yeah, that those are my thoughts, and thanks for watching, and see you in the next video.